What's up, guys? It is Friday, February 10th at 7:08 a.m. and this is the crypto market update. So, we're going to take a look at some of the macro charts that we've been looking at for the past weeks now, and we need to get a status update on them because they're at critical levels. So, usually when you see, and this is the USDT market cap plus USDC market cap against all the total crypto market cap. Usually when you see something break down from a trend line as support, so we saw support, breakdown right here. We initially came up and we got rejected. And now we're coming up again. And this time we gotta get rejected again because we want to see us roll back over. We don't want to see us reclaim this trend line and then head higher here. That would not be good as far as an imminent pump. If we're really at a critical moment where today to the weekend, we got to see something happen here as far as, is Bitcoin going to come down and retest that 20K level as far as the Bitcoin CME gap. Right now it's sitting at the 786 or very close to it. So we're at a critical level as far as these macro dynamic charts we've been looking at. Bitcoin USD to the NASDAQ 100, we got on the 3-week chart, we're still very close to getting these cross up here. So that's a macro time frame. This candle closes in 2 days. So in the macro time frame, we are crossing up. We're super close, but a lot could happen in these next couple of days here where this could revert back down. You can even see just with the price action that we had over the past day or two, this is starting not to be so aggressive, but it's kind of curling back. The worst thing we could see is if we curl like this and we don't get the cross and it comes back down. Something like this over here. So we got to make sure that we're watching this close over the next few days, plus the next candle that pops up through here, which is in 3 weeks. So these next, like the month of February and like to the middle of March is going to be so crucial for the market direction for the rest of the year. 100%. I actually made a whole plan. So a 2023 game plan. I put that in the Discord. So if you're in the Discord, go to that. It's under the Exotic Signals channel or the category Exotic Signals 2023 game plan. I'm pretty sure it's the first channel within that. And there's 3 new documents in there. So that lays out kind of the strategy for the rest of quarter 1 based off the given events, timeline, just kind of narratives that been building up. So take a look at that if you haven't already, if you're in the Discord. But right now, like I'm saying, we're at a critical level as far as we could, don't get me wrong, have a pop above, but ultimately close the candle body below it. Maybe we see a scenario like that where that's what gets Bitcoin down to that 20K level, fill that Bitcoin CME futures gap, and then we have an immediate buyback, and then there's a long wick or something. But that's just one scenario. We could just get rejected here. We don't necessarily have to fill the futures gap, but usually majority of the time we do. So it's always, sometimes it's on the radar, but it's on everybody's radar right now. So sometimes we may not visit it if that's the case. So we have to keep that in mind as well. We can't absolutely say, oh, it's going to come down to get the futures gap, because what if it just keeps going? They're still waiting for that futures gap to get filled, right? It could come back down and fill it later on. But for now, we got to take with the market that we got at hand. That's what we're watching as far as the USDT plus USDC against the total market cap. We want to see this curl back over like that. And this is the daily chart. Let's go down to the 12-hour. We do see the momentum rising up. And it's funny because if you remember, we were watching the Bitcoin chart, the 12-hour, right? This kind of action that we're seeing like this is what we're seeing as far as on the Bitcoin chart inverse. So if I go to the 12-hour, so we're look at the right side here, and we're seeing that same action, but inverse. So we're seeing, bam, we can't get above it. We can't get above it. We've been tracking that we've been saying that since we got below here, that being a concern. So what we need to see and why we watch this chart is it really is like an inverse version of the Bitcoin chart in a sense, because you can see this same kind of movement was happening on the bottom here for Bitcoin. So I'm saying that when this curls down and this crosses through the 50 line, we can almost guarantee that Bitcoin will be crossing up through the 50 line like that. And that's what will make Bitcoin bounce again to go back on a bigger run here. And then us ultimately see this roll back over which sets in stone our bull market run and the bear market being over even more. So that's what we're tracking as far as that goes. Now we're looking at the Bitcoin to NASDAQ 100. And so I have these lines here, and this pattern, I just pulled the 2019 bottom to the COVID crash like that. And I put it right here and I expanded it, right? So all I did was just expand it, and it lines up pretty well as far as just like the type of movement that happened. So as far as this chart goes on the 3-week chart, all these 3-week charts close in 2 days and 12 hours. We're seeing the same type of action, stock RSI crossing up. We've been tracking this. If we look at every single time that it's been crossing up like that, boom right there, boom right here, boom right here, boom right here, right here. Every single time you can look at the chart and see what happened. You know, we went up, and then we kind of cooled off, got back above, went up, right here, went up, here, went up. So when you're looking at these higher time frames like that, and you see the momentum rise, and then you see the MACD cross the green, same, you know, every single time this cross up to here, the MACD crossed the green. And if you're looking back here, green, every single time that happens, you see the overall bear market trend turn around. So that's what I'm expecting. But as far as the short term goes, we can take a look at the dollar and the bond yields and see what the action is right now. So bond yields are at a critical level as far as this trend line coming down, rejection, 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 rejection. We're at it right now, which is right below the 50 line. Actually, I can pull this probably a little closer. Yeah, like that. We're at it. But we could pop up a little bit more, hit that middle line of the void lines. We take this high down to this low, and we still have not yet reached that 786 as well too. So we could have a little bit more of a pop out, little squeeze. But then we need to see the candle body close back below and us all start to come back down here, or just stabilize and not kind of rip up. So yes, that's what we want to see for the bond yields. And then if we look at the dollar, for the dollar, we really need to see us get rejected at that 200 moving average. Because I was looking at the past, and this whole time, ever since the dollar pumping back up here on June of 2021, it hasn't flipped red until we went into like a deep downtrend for the dollar in crypto, and the stock market bottomed and went up. The only reason why crypto didn't do it right at this time because of FTX, but ultimately it should have, because everything else did, gold, silver. But then I was looking at the bear market ever since we went from green to red, right? And this is the bull market of 2020 to 2021. We saw red this whole time until we changed the trend here and we flipped from red to green. We didn't necessarily get above the 200 moving average here, but once we flipped from red to green, got above the 200 moving average, held as support, that was when the bull market was over officially. So what I don't want to see is us come up here and break above, hold that support, and then we see the EMA ribbon come up and provide that support, and then we bounce. That could mean a bigger run up here for the dollar to retest over the 110 level. So we don't want to see that. We want to see a rejection at that 200-day moving average and that EMA ribbon here. So we want to see a lot of resistance coming around like 105 to 104.5. And if I show you on the lower time frame real quick, the 12-hour chart, that's right where the 200 moving average is for the 12-hour chart. And this is what we've been tracking as well for a while too. This high down to this low. We said by the time we probably reach there, the 786, the 12-hour 200 moving average might be sitting just right up there as well too, serving as a good level for a rejection. So if we do have a pump up here on the dollar, that's the level where we got to get rejected by. And if not, then there's definitely an event or a catalyst that's pushing it up that high, or something to kind of making an excuse as to why. Don't get me wrong, dollar is very oversold now at this point, but it can remain it for a long time here. And if we go out to those higher time frames, like the 3-week chart, we really just crossed. We just got down here. We're just seeing the blue cross above the pink. So when it happened back here, yeah, there's a little bit of a period where it's indecisive, where we're kind of holding this level right here. But once it breaks, and then it's on. So that's what we need to see. And we broke below the median line of the void lines on the 3-week chart. We're coming up right now, and we retested it and got rejected so far. So if we can see that be the case here, then we're all good. So if we're looking at the stock market, we're looking on the weekly chart. The candle closes today. Still hugging this trend line here. Still hugging the trend line. We are having a little bit of rejection back down. The 786 is sitting right there around 12,000. We're still dark green in the MACD. Stock RSI is losing a little momentum. Pink's above the blue though. We don't want to see a scenario like back here. If we're to look at it, don't want to see something like that where, we're hugging that trend line. We're coming up, right? And then we see a break. Like once we see something like this come in, and we see this cross down, the blue get back above the pink, yeah, we could say the party's over. But until then, there's still this scenario of us kind of just holding ground here and then popping up and going higher, because we have this high down to this low. We've already hit the 786. If we can hold right here above this horizontal line and retest the 786 again, and we have the momentum keep coming up, it's likely we pop through here this time and we keep rallying on. And we've broken this downtrend as well. So I'm cautiously optimistic on it. This definitely could, it's not out of the realms where this could be a little kind of fake out, pop up, pull back down. But there's a lot of stars aligning as far as this being a true move. And we're seeing macro time frames really starting to shift here. So we can't disregard that. If we look at gold though, gold got rejected by the 786. So these are the lines you want to watch for gold 100%. We need to get above 1950. That's a 786. And then we need to get above these highs. If we do that and hold that support, we're going to come up here to 2400. If we come down and retest the 786 here at 1685 and we break it, then the next level is like 1615. If we break that, then we can bet that gold is going to come down to the 1400s. So I have these levels mapped out based off the Fibonacci and the highs and the lows of the channel here. You can take a mental screenshot of those levels, and you can track that and just treat it as, if you break one, target the next one. So if we break above here, hold a support, target the next one. If we break, like that. Or if we come down here, we hold that support, we set to come up, target the next one. If we come down, break it, come up, right? So that's how you want to kind of look at it. So now let's look at the total crypto market cap. So we're on the 2-week chart, closes in 2 days, the candle. And it looks very similar to back here. I mean, we had kind of like a resting period for 2 weeks. And usually that's what you'll see when you have a big move. You'll have a full month of going up, then like 2 weeks of chilling, and then another full month or two of going up, right? So we saw multiple times, this was like a month and a half of going up, but really just like a month, really breaking the trend and having a solid pop up. Then we had 2 weeks of chilling. Then we had a month of popping up, 2 weeks of chilling, and then a month of popping up, and then it was over. So we've already had a month of popping up. We're about to wrap up our 2 weeks of chilling, and we could see the middle of February to the middle of March be pretty solid. We could see a lot of FUD right now to scare people out of the next big move, and it could just be all fabricated. So we got to keep that in mind too, because the 2-week blue buy nows came in right at that resting period. So when we see the markets open up, or the candle on Monday of next week, it's going to be critical as far as the direction for these next few months here. And I would like to see us hold that level of these kind of lows right here. So that's around 921 billion. And then if we really come up here and we reclaim back above this level, then things are looking very well, because we're reclaiming that same level that we held back in 2021 for like months. And then when we broke that level, that's when we reached our capitulation, and we haven't tested up there yet. So the goal is definitely to get above there, which is 1.3 trillion. So if we look at the bottom indicators, we already have the MACD, we have the stock RSI up, we have the TSI up. That's why the blue line's flashing, and the pink is getting ready to cross the blue. So that does look well. As far as usually when you see that, that's when the trend changes. So now let's go to Bitcoin. And yeah, so one thing we're watching about this is there's a lot of similarities from back in the breaking the bear market in 2019. And we've been tracking this as well. I have the 786 pulled to right here. That's where we found support. 786 pulled to right here. That's where we found support. Also, we had the green turn to red for the market structure band right before actually recovering, going up and sending it again. Then we had the green. I'm on the 12-hour. Let me go to the same. So right there. Yeah. So we have the green just turned to red a couple of days ago. That usually signaled the bottom here. And then we went on to do another big move. And then we saw that the 1618 here, if we broke down from the 786 and came down to that $19,000 level, that's sitting right where these like kind of highs are of us breaking down, capitulation, rejection, rejection. We broke above. It's kind of similar to back here. We broke down, capitulation, rejection, 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 and then we broke above. And we never came down to retest this level down here until way later on, I believe. So that could be the case as well too. Maybe we don't come down here and retest it. And even if we did, that's still, and we maintain above and we start rallying up again, we're still making higher highs and higher lows. We're overall changing the trend direction. There's a lot of similarities here as far as the market structure band from green to red, bottom, then we pop up. We just looked at the 10-day chart for the total crypto market cap, and we said, hey, every single time, I mean, when the blue came in back this time, that was our chill period. It's just wrapping up now in 2 days and 12 hours. So that kind of matches up with on the daily chart, when this turned from green to red, we had a couple more days of sideways, then we popped up. So this could match up, a couple more days of sideways. We see that 10-day candle close. We're done chilling when we pop up. And then also the pink and the blue was kind of like flirting at this middle line here. And then we reversed and went back up. So the pink ultimately came back up. That's what we're watching here as well too. We want to see that happen like back here in 2019. And then let's look at this. Stock RSI cooled off. We want to see a cross up there. The MACD went from red to light white, and then we recovered and flipped green. We're in dark red right now. We need to see it go to light white. And then the RSI was hanging at that 50 level, just like it was back here. So there's a lot of similarities to back at that time. We just need to see us hold the ground here. Prefer at 21,500. We could come down to 21K. We could even see a wick to 20K to fill that gap. It's all about the daily candle closes. So that's what we're going to be watching today. We're going to be watching the dollar. We're going to be watching the bond yields, critical level. We're going to be watching the stock market, how it reacts to that level. We'll watch the total crypto market cap and see if we're holding that horizontal line. And then we're going to take a look at Bitcoin and kind of track if it's kind of following the same similar patterns from back here. Overall, the higher time frames are still signaling that we broke the bear market structure and we're heading into a bull run. So the macro picture is looking great, but any of the short-term stuff, a couple days, a week, is all just going to be noise in a couple of weeks now, because the bigger picture stuff takes a little bit longer to play out, but we've already seen what it's already done. It's cooled off for 2 weeks now. So now it's maybe starting to get ready to gear up again to do its second run. So we'll have to see. So let's check out XRP. Like 0.3840, XLM sitting around 8.5. H bar, it's back up at 7.5 cents. We got V chain up here around 0.024. So we're going to track all these. I'm going to do a private market update for the peer-to-peer trades that we're in, the trades tracking on those. So I'll do a separate video on that for the members in the Discord, and I will see you guys in the next video.